All right, good afternoon, everybody. It is July 15th, 2022. It is roughly 8:50 p.m. Eastern Standard Time here in downtown Miami. Now, it's going to be a relatively short stream. We are closing off this week on Wall Street. We had a little bit of a rally day today going into the close as the markets digested that worse than expected CPI print that obviously came in at about 9.1%. We got that number on Wednesday. Many economists were expecting for reading of about 8.8%, but we have additional economic news coming out today with our retail sales numbers. Okay, so we're going to be talking about that a little bit tonight on the stream. So retail sales rose more than expected in June as consumers remain resilient despite inflation. However, retail sales did rise 1% in June. Many economists on the street were expecting about a 0.9% estimate, but we have to take into consideration that these numbers are not adjusted for inflation. So what does this mean? So obviously, as we've been talking about on the stream, specifically as it details to, let's say, for example, a Walmart or a Home Depot's earnings, same store sales and revenues may be up, but is that because consumers are actually buying more products and services, or is it just because the products and services that they already buy are getting more expensive, right? So we just have to keep that in consideration when we're talking about the retail sales numbers, because the numbers are not adjusted for inflation, which rose 1.3% on a monthly basis. So if you factor in the retail sales increase of about 1%, we're actually coming in slightly negative, factoring in after inflation. So what is that telling us about the health of the consumer? What is that telling us about the optimism, I guess, or the outlook for the consumer's perception of the U.S. economy? I guess we'll talk about that tonight. I also want to get a lot of feedback from you guys, the viewers, as to what you're seeing in your daily life, where you are located, maybe here in the United States or around the world, wherever you are. Are food prices going up in your local grocery stores? Is the price of gasoline, hopefully coming down in your local gas station? Because if we take a deep dive in these retail sales numbers, what we'll find is that gasoline stations, online sales, bars and restaurants were some of the biggest contributors to the retail sales increase. Lastly, to cap off the stream, we did have Morgan Stanley posting their earnings, I believe after the market closed yesterday. And one of the reasons why I wanted to touch on this very, very briefly is because Morgan Stanley is one of the largest investment banks, right? So you could have a retail bank that deals with retail clients, and then you could have investment banking, which helps companies merge. Maybe they help companies buy other companies, mergers and acquisitions, or even maybe they take companies public via the public markets via an IPO or a SPAC or something like that. And if you remember a couple weeks ago on the stream, we were talking about the potential for a massive slowdown in investment banking revenue specifically. Now, why might that be? Well, if we think about what happened during 2020, I would say the latter half of 2020, 2021, the Federal Reserve dropped interest rates to near zero. They printed a ton of money, causing a massive liquidity spike in the system, essentially dumped the system with money. So it spurred this massive bull market. And in bull markets, that is when companies go public. And it's very easy for companies to go public because there's so much liquidity out there. It's very easy for investors to raise capital. You sort of get this euphoric feeling in the market. And as we talked about, year over year, if we compare it to late 2021, new issues of initial public offerings of the IPO market is down 97%. So if we think about how a traditional investment bank makes the majority of its money, it's off of fee income, right? So if you're taking a company public, you're doing equity underwriting, you're doing secondary offerings, the investment bank, whether it be Morgan Stanley, Deutsche Bank, Goldman Sachs, they are going to charge fees, oftentimes egregious fees, be it that, and make a ton of money. But as deal flow is slowing down here, right, a terminology on Wall Street if you're in investment banking is deal flow. How many deals are you working in the M&A space? How many deals are you working in the IPO space? Now that we have entered a bear market, the Federal Reserve is raising interest rates, the cost of capital is going up. We've sort of seen the IPO market go completely silent here. So Morgan Stanley misses analyst estimates on worse than expected investment banking revenue. But if you've been listening to the stream, we've been talking about this for months. In addition to that, the CEO of Goldman Sachs actually telegraphed that this would happen, saying on their last quarterly earnings report that these investment banking revenues were not sustainable because you've seen an amazing bull market in terms of IPOs, in terms of companies becoming public in 2021. That is all coming to a head. So Morgan Stanley misses on earnings, on worse than expected investment banking revenue, but we already knew this. So if we talk about an earnings per share, they came in at about $1.39. Consensus on Wall Street was about $1.53. Revenue, a little bit of a beat there. Analysts, actually a little bit of a miss. $13.13 billion Morgan Stanley reported. Analysts on Wall Street were expecting about $13.48 billion. I believe actually Morgan Stanley popped a little bit this week. But that's what we'll be talking about today, folks. Let's see who we have in the chat. Once again, we are at downtown Miami. We are going to be walking to the Bayside Marketplace this way. So let's see who we have in the chat. I hope everybody's having a good Friday. Minraj is here, says, what's up, Tom? Good to see you, Minraj. Dalton is here. The one and only Vinny Castellano says, happy Friday. Vinny, good to see you. Hopefully you're feeling better. I know, Vinny, you were telling everybody, I missed some of the comments, but supposedly you had COVID, so hopefully you made an absolute speedy recovery. Hopefully you're feeling strong. Hopefully you're feeling better. We are pulling for you, so hopefully you are on the mend, my friend. So good to see you, Vinny Castellano. I see Star Fox is here. Welcome, Star Fox. Always a pleasure. Always good to see you. I see the one and only ABX girl from the Bronx joining us. Good to see you, the ABX girl. Happy Friday. Hopefully you are having a fantastic start to the weekend. I see Sabrina Fair. Good to see you, Sabrina Fair. Brian says, good evening, Tom, and everybody in the chat. Good to see you, Brian. Sabrina Fair. Wendy England is here. Crystal Ward says, happy Friday, Tom. Wendy England, the one and only British Grey, is joining us. Good to see you, British Grey. So this has concluded the first official week of Q2 earnings. It's been so busy for me at work. I haven't had a real, time to sit down and scrutinize a lot of the reports that we got so far. I think today, after the Bell BlackRock reported, did not get a chance to listen in on that earnings call, but rest assured, tomorrow and Sunday, I will take some time to sit down and really scrutinize those reports. So we will talk about it on the stream. Arum Z is here, says, hey, Tom, good to see you, Arum Z. Karen Alcatraz is joining us. Good to see you, Karen. Two Wheel Freedom says, are you thinking about dipping into single stock ETF? Not sure who would benefit from it outside of market manipulation. No, I mean, for me, I think I'm at the highest cash levels in my actively managed portfolio I've ever been. So I think I'm about 93% cash in my long short actively managed portfolio, as you guys know, which is just in a basic taxable brokerage account. I tend to use Interactive Brokers, Charles Schwab as well. But in my retirement accounts, like my IRA, it's just dollar cost averaged into the S&P 500. Look, I think after the CPI print, we were talking about this a little bit yesterday, after the hotter than expected CPI print of about 9.1%, I think the Federal Reserve is going to be pressured here to raise interest rates probably by another 75 basis points, or if they follow the Bank of Canada, the Canadians actually raised the full percentage point or 100 basis points. Jonathan Francis says, hello, Tom and group. Good night and happy Friday. Good to see you. Jason Francis, sorry about that. Two Wheel Freedom says, looks like this crypto winter is taking out all the poorly managed exchanges. Yeah, you're right.
I think there's going to be a lot, well, there already is a ton of liquidations going on here. I think the biggest, I guess you could call it a black swan in this market cycle in relation to cryptocurrencies has been all of these DeFi type protocols, which we've been warning about for the longest time on the stream, how they're either one of two things: outright, Ponzi schemes or scams that went bust, which I think the vast majority of them are. Because if you think about it, if you have something that is guaranteeing you a 19% risk-free rate of return, I think it's best to use our judgment and say, if it seems too good to be true, it probably is. There's no special algorithm, and however you want to dress it up, that's going to make those returns sustainable. So I think what you saw is massive liquidity and fund flows go into these DeFi protocols and exchanges that are quote unquote lending out your stable coins and things like that. And then once all of those went bust, it's sort of like a domino effect. I guess you can sort of compare it to the Warren Buffett saying. He's like, when the tide goes out, you'll find out who has been swimming naked. And I think that is very, very fitting to what's going on or what has already happened, especially with Three Arrows Capital, if anybody's familiar with them. About a $3 billion hedge fund liquidated to zero. There's going to be tons of litigation and lawsuits around that, by the way. Hey, Robert is here, says there's not going to be a recession. Everything is going to return to normal. Yeah, Robert, you could be right. You could be right. I'm not going to say you're wrong. Robert, we were talking about I think the chief market officer of global capital markets at Credit Suisse. And he said something similar to what you said. He said, I don't know the verbatim, but I guess I'll paraphrase. But essentially what the team over there at Credit Suisse is saying is that it's going to be very, very difficult for the United States to fall into recession, being that the jobs numbers are continuing to print very, very positive. So if you look at the data, there's actually more jobs available in the United States now than there are actual people looking for work. So we got the jobs numbers last week. They came in actually better than expected. But the only thing that concerns me is the labor force participation rate the labor force participation rate is at all-time, well, I wouldn't say all-time lows, but near all-time lows. And we still don't have the amount of people that were employed in the labor force that we had in 2019 before the pandemic, which is very, very concerning to me. And more people are dropping out of the labor force altogether. So if you look right in front of us, everybody, you have the beautiful Miami Tower, one of the most unique buildings in Miami, I think. Robert says, yeah, the market just isn't going to be an ATM like it's been. Well, yeah, I think it really just has to depend on corporate earnings, like you said, Robert. I think you're making some good points, and that's why I think this earnings season is so critical. Obviously, I think there's a lot of new people that came into this market that were very novice, I guess, that, I guess the best way to explain it is they mistaken their smarts for a bull market, right? And when you have rates starting to normalize here and liquidity starting to dry up, a lot of these names that were trading at ridiculous price to sales, ridiculous price to earnings, they're going to come back down to earth. And I think you've already seen this, right? You look at a lot of the, ARK Innovation ETF, that thing is down like 75%. And the thing that's concerning me is that I do not believe this market will bottom. I do not believe this market will find a bottom until all of the Reddit crowd, the meme coin people, are really flushed out of the market and totally pummeled into oblivion. And the reason why I say that is because oftentimes I watch fund flows very, very carefully. Okay, and in May, Cathie Wood's ETF, or the ARK Innovation ETF, which tends to have a lot of unprofitable, very high beta companies in it, had all-time record high fund flows. That means there's people still out there that are buying this dip, and I think that's why you continue to see the VIX in the mid-20s. Letter that I was writing for everybody. If you think about when the stock market bottomed in 2020, in 2018, I would say 2014, 2015 during the taper tantrums, and then during the great financial crisis, notice where the VIX was. The VIX went to Mars. The VIX was near 60, high 50s, low 60s, sometimes even 80. Right now we're dabbling around there in the mid-20s, and this to me signals investor complacency. So I do not think that this market will bottom, or find, as I like to call it, a generational bottom, until you see one of two things, or both. Number one is a massive spike or a blow up in the VIX, which is the CBOE volatility index. And number two, you want to see that put to call ratio really, really start to ramp there as well. You want to start to see, and you can compare this, the put to call ratio, what it was in 2020 with the COVID crash, where it was in 2018 when the market bottomed right on Christmas Eve. The put to call ratio went to Pluto, which means the market was stacking the put side of the market. So if anybody's not familiar with the derivatives market, in the options market, you have puts and you have calls. And to put it in layman's terms, a call contract gives you the right, but not the obligation, to purchase 100 shares of an underlying security. And the same goes with the put contract. A put contract gives the owner of that contract the right, but not the obligation, to sell 100 shares of that underlying security. So you can essentially think about it, if you're long a call, you're making a bullish bet on the market, and if you're long a put, you are making a bearish bet on the market. And you want to see the put to call ratio really get lopsided there. So if you have more people betting against the market than you have betting with it, that's usually when the markets tend to bottom a little bit. Hey, King says, hello, Tom. You have the best reality broadcast voice on YouTube. Thank you, and keep educating. Well, King, thank you for saying that. That's really kind. I appreciate you joining the streams, and I appreciate the conversations we have. The ABX girl says, Robert, I agree 100%. Where I am, jobs are paying $15 an hour with $1,800 per month rents for a 2-bedroom apartment with daycare at $1,000 per month. That's insane. Joe Hernandez says, many people are changing their careers and corporate needs to change the pay and bonus structure, says Joe Hernandez. Yeah, I mean, that's a good point too. Roy S. says, Tom, I read the article that you sent in Discord on the average rental prices in Manhattan being $5,000. Yeah, so the average rental price on the island of Manhattan is $5,000 a month. But I think it can be a little bit misleading here, everybody, because if anybody's familiar with Manhattan, you have places like 57th Street, which is what we call Billionaires Row, where if you actually go on Zillow and you want to rent, let's say, a 1-bedroom or a 2-bedroom apartment on Billionaires Row, depending on the building, it can be like $85,000 a month to $100,000 a month. So when you take the average, you can sometimes get a little bit of skew. So I think it's better to work off the mean, or the median, the median. But even the median rent, I think, is approaching $4,000 too, which is kind of crazy. I see Gregory here. Welcome, Gregory. Wendy England, hope you're well. Kathy Lyons says, beautiful buildings. Happy Friday, Kathy. Good to see you. Roberts says, back in the day, companies would treat employees like crap. Now the shoe is on the other foot. I don't blame people not wanting certain jobs. Yeah, so Robert, that's actually a really good point. So Robert, I'm not sure if you were connected on Twitter, but if you guys want to connect on Twitter, you could follow @WalksWallStreet. And there was a leaked video footage that actually just came out from Howard Schultz. And obviously now Howard Schultz is back in the driver's seat of Starbucks once again as chief executive officer. And it was really, really interesting. So Starbucks is announcing that they are closing multiple stores with, and I quote, more store closures to come. But here's the interesting thing. Here is the kicker here. So Howard Schultz, a man who I respect greatly. I think he's a fantastic American success story, an unbelievable American entrepreneur. What he said is, when he took over the realm as CEO once again, he started to do sort of like a roundtable, visiting partners, as he calls them, in the retail stores around the country, across the country. And what he found is in select markets, the number one complaint from employees wasn't that they weren't getting paid enough, wasn't that they're working too long of hours, but that they're fearful of their lives because the stores have turned into literal homeless shelters. So they're fearing for their safety. So Howard Schultz, taking all that into account, he's like, oh, well, this is probably why we're seeing incredible employee turnover. So the employee retention at Starbucks has taken a massive, massive hit ever since the pandemic. But it's select stores, the stuff that these Starbucks employees have to deal with, video, is just insane. People in bathrooms doing cocaine, yelling at the employees, being belligerent, really, really crazy. So to your point, it's like, why would you want to stay working for a company when it's not even safe to work there? So, supposedly from the leaked video, there's actually going to be more store closures, and Howard Schultz said something really telling. It's like, we're not closing them because they're not profitable. The stores are actually really profitable. The problem is the government municipalities have made it unsafe to operate a business there. Really, really Two Wheel Freedom says, did you touch on the massive prime/subprime car repos and how that will spill into excess auto inventory, bringing prices back down? Yeah, so that is, I actually think that's a blown. Again, I could be wrong. I'm not the end-all be-all. I think it's a good conversation to have. We did briefly touch on that a couple streams ago. But essentially, I think it's actually going to be pretty normal. And the reason why I say that is because if you look at the used car market over the last year, it's been absolutely insane. There were stories, in some cases, people who bought new cars in 2019 actually could sell those cars for more than what they bought it for. So the used car market was on fire, and I think it sort of forced people to go in a little bit over their head and take on payments that they couldn't otherwise afford. So yeah, I think you are going to see defaults skyrocket here, but I think it's going to, affect the obvious. Oh, hold on. Sorry about that. I think it's going to affect the obvious segments in the market. And I think you guys could sort of pick up what I'm putting down. And usually that just sort of cycles through. But I don't think the default risk is going to be grave that it'll spill over into other markets. That I don't think so. But, it's very possible you could see a big glut of repossessions here. And hopefully the used car market drop down here a bit and prices come down. I was reading an interesting thesis. I forget who the economist was. I'm going to have to go back on Twitter and either put it in the Discord or retweet it. But it was a really compelling piece. I'm not sure if I agree with it 100%, but I thought it was a really, really well-written piece about how the number one thing that Americans should actually be worrying about right now is actually deflation and not inflation. Now, again, I don't agree with that necessarily, but I do think it was a really, really well-written piece, and I'm always open to, reading different types of investment research. So I'll definitely post that in the Discord for all of you. Mike C says, whenever the government starts controlling markets, shortages are sure to follow. Agreed. Daryl says, Tom, Action Kid is live now in Coral Gables. Nice, love Coral Gables, Florida. So I think Coral Gables is where the University of Miami is, if I'm not mistaken. Gregory is here, good to see you, Gregory. The ABX girl says he is also closing stores that just were unionized. Yeah, I think the biggest thing with that, the ABX girl, is if you look at, so I read something, I think some local politician posted that, you know, Howard Schultz and Starbucks are intentionally closing stores that were unionized. I don't think that's the goal there. I think it just may be a coincidence, because if you look at the stores that are unionized, they tend to be near cities. And, you know, and if anybody's been into like a Starbucks near Penn Station or something like that, I mean, you know, I don't want to dump on it too hard, but, you know, there's a lot of homeless, a lot of drug problems there. And, you know, a lot of the times they use those public restrooms as a way to, you know, shoot heroin and things like that, unfortunately. Hey, photos from around New York says, yes, it is the U Miami Hurricanes. You know, the University of Miami is one of my favorite campuses. One of my favorite campuses there. Always enjoy taking a walk around the University of Miami. But now we are at the Bayside Marketplace. I guess we'll do one lap and then we will head to Brickell. Wanya Cass says, good evening, Tom. How are you tonight? I'm doing really good. Doing really good. Looking forward to the weekend. The only thing is, here in Miami, we may have brutal storms over the weekend. So I think all day tomorrow and maybe all day Sunday will be an absolute and total washout. But hopefully not. So I guess we'll just have to see. I think I looked at the weather app and it said the rain was supposed to start at 4 o'clock in the morning. Potential rain, and in addition to rain, potentially hail as well. So I guess we'll just have to see.
You told me it was sometime in January.
LACT. Good to see you. Wendy England says, I see there was a string of fatal shootings at 7-Eleven stores in California. I heard something about that briefly, but I haven't really been following up on it. I mean, the unfortunate thing is, you know, this year it just seems like every time you turn on the news, it's like another mass shooting somewhere, be it a school or a supermarket. It's gotten out of control. Here now says, I enjoy this chat. It's interesting. I always listen. But global approach is overrated. Just own 30 to 50% equities and buy/short. Cash checks is here now. Very interesting, yeah. Well, good luck, good luck. Thank you for the comment. Hopefully you're having a good start to the weekend here now. Yeah, the ABX girl says, so far no NYC closures, just in California, or mostly in California. Ryan Royal, good to see you. Hopefully you are doing well, my friend. So the ABX girl, Morgan Stanley did report their earnings. They did briefly miss the mark, but I think this was really to be expected. And, you know, as we've been talking about, investment banking revenue specifically has really fallen off a cliff and taken a nosedive. I think for obvious reasons, right? I think the most obvious reason is because, you know, we are now in a bear market, so less deal flow. You know, if we talk about companies going public, so equity underwriting, things like that, M&A departments have a lot less work on their hands. So investment banking revenue is really taking a big hit to investment bank specific profitability. But Wells Fargo actually reported a pretty decent quarter. But overall, not bad. I mean, overall, not bad. I mean, aside from the investment banking revenue falling short, you know, the vast majority of big bank CEOs are saying that consumers and their customers are weathering this inflationary storm rather well, and hopefully there's some light at the end of the tunnel as we see these commodity prices come down, and hopefully that'll reflect in the CPI in the following months. LACT says they got the guys in the 7-Eleven shooting. That's good. Hey, Austin City Limits says, hey Tom, good to see you. Hopefully you are well. British Gray, Roy S is here. Sabrina Ferris says, Tom, exactly, that's why I want a quick trip to Paris. Photos from around New York says, dumb question, an individual can buy a stock, but how do you make a put or a call option? Well, you can just buy derivatives in your local exchange, right? So if you have Charles Schwab or whatever sort of broker that you have, I think you just have to apply to trade options, right? It's going to ask you a questionnaire to say how many years of experience do you have of options or derivatives trading, and then you will have access to do it. But I wouldn't really advise trading options or buying or selling options if you really don't know sort of what you're doing. Hey, Here Now, thank you so much, my friend, for the very kind $20 donation. You are very kind, and we appreciate the support. This is Tom, grab a slice of pizza. I will. We'll have to check out some Miami pizza down here, but thank you so much, Here Now, for the donation. We appreciate it, and thank you for supporting the channel. Mike C says, yes, Schwab makes you apply to trade options. Yeah, so Mike, here's something interesting, Mike, and this was one of my really big grievances that I had with Robinhood specifically, is because you're supposed to ask your customers in an ethical way, how many years experience do you have trading options, what is your net worth, and things like that. And what Robinhood was caught doing is they found out that there were 18-year-olds on the platform claiming that they had over 10 years of derivative and options trading experience, which, I mean, that's obviously just a complete and total lie. But Robinhood was just checking the boxes and not really doing their due diligence. And what they found is that they were granting access of minors and people that really weren't even supposed to be trading on the platform to trade extremely high leverage derivative products, and even sell options too. And I think we've been over the extreme dangers of selling options if you don't know what you're doing. And that actually began to spark really bad things that were happening to these young kids. They were having negative $100,000 account balances because their accounts were being margin called and things like that. And it actually led to a suicide of one of the Robinhood users. And this has been, sort of my base case for Robinhood to begin with, is that they really don't care about their customers. They just want to get people in the door trading because they make money every time somebody trades, obviously. And also they market investing in the stock market more as a casino and gambling as opposed to actual investing, which is definitely unethical in my opinion. Hey JP, good to see you. JP says, yeah, shout out Wall Street Bets. Yeah, so Wall Street Bets are those Reddit crowd people that definitely I do not support that kind of activity. It can be fun and you can have a laugh, to gamble and, YOLO, I guess is the term the kids use nowadays, on options contracts. But at the end of the day, as you get older, you're going to regret that stuff. You're going to regret doing that stuff and losing all the money when you could have just invested the proper way, sustainably over the long term. So when you're in retirement, you have tens of millions, if not hundreds of millions of dollars in the bank. So this is the Ferris wheel here. Sometimes the internet is not too good. Hey, Minnesota Walking says, hey Tom, I had a friend talking to me saying that selling options premium is risk-free. I am fearful for their future. Yeah, that's definitely fake news. I wouldn't even continue that conversation with that person. Because I mean, at the end of the day, I don't think that these people really understand, like they could really put themselves in a lot of financial trouble here doing that stuff. So this is the beautiful view, I believe right outside of the Hard Rock Cafe here in Bayside Marketplace. And you're looking at the one and only beautiful Paramount Tower right here in the distance. Hey, Brad's Brain says, things have changed so much. My dad actually had to pass a test to trade options in the 80s. Yeah, so Brad, you're right. But the reason why I think there's a lot of, I guess you could call it fraud, is because nowadays everything is online, right? So it's not like you have to go in person and somebody can actually verify that, you know, you're not a 16-year-old kid lying about your age or lying about your experience. You know, with other brokers, they do a little bit more due diligence. I remember with my Interactive Brokers account, I think I actually had somebody call me, which is the right thing to do. I mean, at the end of the day, it's very irresponsible to have kids like 16, 17 years old, you know, selling options and doing all this stuff that can put them in a real world of financial hurt, in my opinion. Check out that bird right here on the, it looks like the bird is stalking some sort of fish in the water. Maybe it's going to eat it. Yeah, photos from around New York, so still seems like Jack Bogle's plan of following the S&P 500 is the way to go. Yeah, I mean, it's definitely one way to go, for sure. That is, I would say, a very large portion of my retirement funds are just indexed to the S&P 500. You know, photos from around New York makes a good point. We talk about, you know, Jack Bogle or John Bogle all the time, which is the CEO and founder of the Vanguard Group. Unfortunately, he did pass away, I think, last year. But, you know, he's the only person who pioneered a very low-cost ETF or an index fund that tracks the overall returns of the market with very, very low expense ratios or management fees. But I also think there's a very important part in the investment business for actively managed assets, because I think it keeps companies accountable, and especially if you're investing on the basis of an activist investor, you know, which is you're acquiring very, very large stakes in a company to hopefully get a seat on the board, to maybe influence different policy at the company. So I think that does have its place, but obviously, you know, if you're a passive investor and you're really not familiar with the investment business, I think dollar cost averaging into a very low cost index fund is phenomenal. I do it myself. Walking Minnesota says, hey Tom, I believe BlackRock was saying today in their earnings that their ETFs would likely get a lot of attention during the current volatile/bearish market. Yeah, I mean, I didn't get a chance, Walking Minnesota, to check out BlackRock's earnings report. I know that they reported today, but BlackRock has a ton of ETF products. So maybe they were talking about some specifically that were maybe like dividend-heavy ETFs, perhaps. So keep an eye out on the water, everybody, because sometimes we see dolphins jumping around here. So keep your eye out on the water. Check out this plane taking off from Miami International Airport. Amazing. Hey, Two Wheel Freedom says there was a mass exodus from Robinhood last year. I guess those kids got smart or lost all their money. Yeah, I mean, hopefully, I mean, you never like to see people lose all their money. But I mean, the biggest thing that I had a problem with Robinhood is that I think that they were intentionally misleading people into, thinking that investing is about gambling. And I think that was pretty obvious. Obviously, they're not going to say that, or they would never admit that, but I think it's pretty obvious. Every time you place a trade on Robinhood, there's like confetti blowing around in your face and all that stuff. But that's just my take on it. Something interesting out of the housing market I wanted to discuss with everybody. There was some data coming out of Investors Business Daily that I think it said 42% of all single-family homes that were sold last month were acquired by institutional investors. Billy says, I only sell very far OTM call options, then reinvest half that back into the underlying stock. Then the other half I save for events and data for buying calls and puts. Yeah, again, if you know what you're doing and you manage your risk, it's an absolute great tool. I think the problem, Billy, was that you were having 16-year-olds doing this stuff and lying on their application to Robinhood, and obviously Robinhood wasn't doing any due diligence. But let me put the camera down for 2 seconds. I want to actually see if I wrote down that exact statistic, because I think it's pretty interesting. Because we've been talking about this exact same thing, right? The single-family housing market, even though it's on fire, we have to look at who the buyers are. Are they mom-and-pop investors? Are they first-time home buyers? Who are these people? So I thought it was interesting when this data point came out, because it seems like more and more institutional investors are getting into the single-family housing market specifically and buying up single-family homes. So I think it says corporate ownership of single-family homes rose during the third quarter of 2021 at the fastest rate in 16 years, according to a U.S. House subcommittee report released in June. During Q3, for example, institutional investors bought 42.8% of homes for sale in the Atlanta metro area, and 38.8% of homes in the Phoenix/Scottsdale area. So think about that. We can pretty much chalk it up to say that almost half of all the homes purchased in Q3 in places like Atlanta and Phoenix were all institutional investors. Now, why is that important to pay attention to? Well, because that is taking supply off the market from a would-be first-time home buyer, and what these institutions are going to do, obviously they are not going to use the homes to live in themselves. They are going to use them as cash flowing investments to rent single family homes back to people and make money off the cash flow. So this has been a very, very controversial topic. Many people think that there should be a limit or a cap to the amount of single family homes being sold for investment purposes. But what do you guys think? Do you guys think that there should be a cap on the amount of single-family homes that are able to be sold exclusively to institutional investors, or do you think it should just be free reign to do whatever you want? Wendy England says so much institutional buying of real estate going on here in Vancouver, and a lot of it has to do with money laundering. Wow. Mike C says Robinhood is from the same ball of wax as predatory lenders that started the 2008 financial crisis. Yeah, I'm not going to say you're wrong there, Mike. I think you make some good points. Yeah, Captain Coomer says, Tom, also BlackRock is buying up homes to rent as well. Billy says, Tom, there's lots of foreign buyers too right now. That's right. Billy, there's a ton of foreign buyers here in Miami, like a lot. And I think you're seeing that because there's a lot of turmoil in all parts of the world. Especially, I think we were talking about this on the other stream, if you think about places like Russia, places like China, there are mass exodus of multimillionaires and billionaires. They like to call them in the investment business the ultra high net worth individuals or ultra high net worth families. They are leaving places like China, they are leaving places like Russia, they are leaving places like Argentina and trying to park their money elsewhere. So they would rather come to, let's say, Miami, buy a couple $1 million apartment, do the same thing in New York City, where at least their money will be safe. It can be stowed away in an apartment. And as we were talking about, one Wall Street Journal article, I believe this was about 3 months ago now, the article essentially called a lot of these purchases quote unquote piggy banks in the sky, in which case these investors don't even live in these apartments for the majority of the year. They may go there, 30 days out of the year, 60 days out of the year, and the remainder of the time those apartments sit vacant. So as they like to call them, piggy banks in the sky. Yogi says, when will companies own every piece of land in the US? I mean, I don't know about that. I think if we think about like farmland specifically, I think Bill Gates now is the largest single owner of American farmland in the world. PHX Aggie says, will these institutions still be buying them over the next 1.5 to 2 years in Phoenix? Asking for a friend. I don't know. I would assume not. I mean, if you think about all of these institutional investors locked in, these loans are locked in a lot of this debt at sub 3% interest rates, right? So they necessarily don't care about the capital appreciation. They're just caring about the cash flow. And right now, rental prices are through the roof. So let's say if a mortgage on a single family, 3-bedroom, 2-bathroom house is $1,800, and they could rent that house out for $2,500 or $3,000. Well, they're making a killing off of the cash flow, right? That property is cash flowing very, very nicely. But in theory, as interest rates go up, the prices of these homes should go down, right? That is the theory. As rates go up, the cost of capital goes up, thus the prices of these homes should go down. But we have not seen that yet, because we have not seen a lot of inventory come onto the market. And I think that if you're trying to compare this to, let's say, a 2008 type scenario, I think it's very hard to do that, because in 2008, really what caused the financial crisis was a wave of defaults all at the same time, because of, number one, adjustable rate mortgages. A lot of people were duped into taking these adjustable rate mortgages, so when interest rates up, they had balloon payments. Number two, that there was no income verification, really no credit checks or things like that. So I don't think that we will see a 2008 style crash. I just think that we'll probably have a little bit of a slowdown in the housing market. But that is my view. What do you guys think? Two-Wheel Freedom says, Tom, farmers are revolting against Dutch government for possible loss of farms due to new regulations. Yeah, I think that has to do something with the fertilizer, right? Regulations in relation to like the fertilizer and all that stuff. Joan is here, says, hello, Tom, good to see you, Joan. Chris Beeman is here. Chris, good to see you. Chris Beeman is joining us from the one and only Arizona. Always a pleasure to have you here, Chris. Cindy Foley is our good friend joining us. Says, hey, Tom. Western Mass Dave says, hey, Tom, and good evening to the best family on YouTube. Dave, thank you for that, my friend. We appreciate it. We appreciate you, Western Mass Dave. We're actually walking through the Bayside Marketplace here in Miami, but we will be headed out now back to Brickell, in which case we'll be walking over the bridge from downtown Miami to Brickell. Last night on the stream, we actually saw something pretty cool. So in other news, Ken Griffin from Citadel Securities. So Ken Griffin actually started Citadel Securities from his college dorm room at Harvard University, but really created and established the company as a staple and an icon to Chicago, Illinois. But ever since the increase in corporate taxes in Illinois, high taxes, let's just say high crime, allegedly, I don't want to get the big firestorm started in the chat, Ken Griffin chose to move his operations of Citadel Securities right here in Miami. So we actually walked past and did a stream near the new location where the brand new Citadel Securities building will be, that will house all of the Miami employees. So if you want to check that out, feel free to check out the stream I think it was like the last 15 minutes of the stream that we had yesterday. So please feel free to check that out. But if you guys are enjoying tonight's stream, feel free to leave a like on the video and subscribe if you are new. We do these live streams about 5 days a week between New York City and Miami as we talk about the financial markets. So we'd love to have you here. Chris Beeman, good to see you. Jetstar says, no, Tom, you're right. Crime is up in Chicago. This is Jetstar. Good to see you, Jetstar. British Grace says, everybody please pray for our friend Chris Beeman. We will. Chris, shoot me an email. Yogi, good to see you. Let's see who we have. Ryan Royal. Yogi says, how did buying up single family homes get so profitable for corporations all of a sudden? So I think it's always been profitable, but here's why I think it has been fashionable as of late. And I think fashionable is maybe the appropriate term, maybe not the appropriate term, but hear me out and let me know what you guys think. Because I'm more interested in your opinion than hearing my own, if that makes sense. Here's my thesis on the whole thing. Ever since, let's just say 2020, the latter half of 2020, when we went into the COVID lockdowns, I think a lot of tech workers or people that are able to work remotely, they've realized and that they've noticed that you can really work remotely anywhere, right? So why do I have to be living in, let's say, a big city if it's only myself? Or let's say, why do I have to be living in a big city if it's me, the wife, and the kids, when I could maybe buy a house, have a backyard, 2-3 bedrooms, an office. So why don't I just buy a single family home? So I think the investors or big investment institutions, or I think more specifically big real estate investment trusts, probably noticed this, got ahead of the curve, started buying up all that inventory. So as other people look for more space, the single family housing rentals will pop up and they're like, hey, this is a nice house. It has 3 bedrooms, 2 bathrooms. It has a backyard where the kids can run around and we could work remotely from here. Why do we have to slam all of our kids in, a 1-bedroom apartment in Manhattan? So I think you saw a big exodus from cities, more people choosing the suburbia life. And I think a lot of investors had that edge, knew about it, raised a bunch of money, and started acquiring these homes. I mean, that's the only thing that I could think of. Here now says, I say be cash heavy and rent everything other than a beat up old car. This is here now. Yeah, or you could be an owner. So I think in my equity portfolio, like my long short portfolio, I'm very cash heavy. But over the course of my lifetime, I think the goal for me is to acquire as many units as possible. Right? So if, let's say if I'm, 27 years old now, and as I move towards 77 or 80 years old, I own, 350 to 500 units, then you could take that property portfolio and market it to a BlackRock, market it to Goldman Sachs, Morgan Stanley, or private equity, or whatever, and you could sell off your portfolio when you want to retire. Right, so if you have a portfolio of really, really high quality properties that are cash flowing, let's say you don't want to pass on the family business to your family, you could just do a big block order or a big block sale of all your investment properties. Because I think it's important as people head into retirement age that they realize that you need something to supplement your retirement, right? And I think the number one thing that's the most important is obviously shelter, right? Everybody needs a place to live. Everybody needs a place to take a shower. So I think the younger you are, I think you should try to at least acquire a duplex or a triplex or something like that as fast as possible, and try to have your tenants help you out with the mortgage and pay down the debt on that property. You know, maybe we'll jump on the Metro Mover tonight. Let's see, let me cross the street. If the Metro Mover's not packed, maybe we'll jump on the Metro Mover. We'll see. Nirvana Fan 500 says, I'm broke and gave no future prospects, but I like the view. Nirvana Fan, what they say, there's a good saying, you usually write whatever you think. Right, so in relation to yourself, whatever your perception of yourself is, you're usually right. Whether it be a negative perception or a positive perception. So if that's the case, you might as well have a positive perception and bet on yourself. So that's what I'll say about that. It is really, really windy tonight, everybody. Crazy windy. The ABX girl says, unfortunately, even rural areas are losing affordable places to middle America. Hey, Dusty Cole is here. Says, hey, Tom. Walks from Wall Street. How are you? TGIF. Yeah, TGIF to you too, my friend. Hopefully you're going to have a beautiful weekend. Sean Connolly says, hey Tom, if you're looking to buy a residential rental property to live in for 1 year, would you recommend waiting until 2023 when interest rates peak? Well, I think, Sean, that's assuming that we know when interest rates are going to peak. Right? I mean, I don't think anybody, doesn't matter how smart you are, I don't care if you're Ken Griffin or I don't care if you're Ray Dalio, I don't think anybody can say with certainty if they think rates are going to peak or exactly when, right? So here's my take on real estate. And again, my view may not mean much because I'm new to real estate. I only own one property so far, which I acquired it, I think, about a year ago now. So here's what I'll say. But again, this is just my opinion. So it may, take it as it comes. And I think the good thing about these streams is that everybody has their own opinion, and I think that's very valuable. And I think it's good to hear everybody's opinion on it. But here's what I think in relation to real estate specifically. I think you can buy real estate at any time. But what I wouldn't do and what I wouldn't advise is to give in to all of this craziness or all the craziness that has happened over the last year. And what I mean by that is crazy bidding wars, people, putting in $100,000, $200,000 over ask because they really, really want the house. They're like, oh, it's my dream home. I really want it. I think you have to realize, quite literally, there is a home on every single street corner in America. Quite literally. And I think if we keep that in perspective, and as you look at more deals, there's never going to be a perfect deal, but there are always going to be deals that work. And what I mean by that is, let's say if you're going to buy a duplex or a triplex, it's your first deal, and you run the numbers based upon your personal income, right? Not your friends, not your neighbors, not your buddy, not some guy that you met online, not even me, Tom, walks in Wall Street, based upon your own personal finances, right? This is nobody else's decision but yours. So let's say if you make $200,000 a year, $100,000 a year, and you're looking at homes in the $400,000 range, and you can get, let's say, $750 or whatever the amount it is on rent, and you say, okay, this property will cash flow. The numbers work, the deal works. It doesn't matter where rates are. Okay, it doesn't matter what sort of the market environment it is, because you're not looking to speculate in the real estate market, right? You're going to need a place to live. You want to acquire properties over the course of your investing career, right? You want to own these cash flowing assets. So if you're looking to not sell the property for the next 10 years, I think, and again, I could be wrong, but this is just my view, I think you can buy in any market environment so long as the numbers work for you. Based upon your income, based upon your credit, based upon your savings, based upon if the property will cash flow. If the property cash flows and you could afford it, it's within your budget, it's not going to break the bank, you should pull the trigger and buy the deal. I think otherwise it's just speculation to say, oh, the property value may go down. Yeah, the property value may go down, and it probably will. But why do you care if the property is still cash flowing, and if you hold the property for 20 years? I mean, it's almost a surefire thing. If you buy in a good location, if the property is in a good school district, you're probably going to make money in real estate. If you don't speculate, if you're not trying to flip things around, if you just do the work, you're patient, and you buy good deals in good neighborhoods and good cash flowing properties, right? I think where a lot of people can go wrong is number one, they over leverage and they try to time the real estate market. I don't know how to time the real estate market. Me personally, I don't. So my goal is to acquire income producing cash flowing properties over the course of my investment career in a way that's comfortable for me and that I'm not going to be over leveraged and be at default risk. But I don't know, could yields peak next year? Yeah, maybe. Could yields continue to go up and real estate prices crater? Yeah, that's also possible too. But I'm not smart enough to know when that's going to be honest. I mean, we could speculate, but I think in real estate, you're living in your real estate. You can't really live in your stocks. You can't take a shower in your stocks. You can't brush your teeth in your Apple shares, right? But you can brush your teeth in your house. So even if you're a little bit underwater and your house goes down in value, if you hold it and you just live and you go to work and you wake up every day and you work hard, I think you'll come out on the other end pretty good. But again, that's just my take. Hey, here now is people that live in your place or your 300 places. They will beat it up and burn it down. I guess I just don't trust people. Yeah, well, I mean, I think the thing is, if everybody thought like that, we'd have no housing, right? We'd have no apartments. I mean, I think in Miami alone, there's thousands upon thousands upon thousands of apartments, and somebody's making cash flow on all these deals. If you look around at all these buildings, these are renters right here, renters in this one, collecting rent. So, but again, whatever I say here, this is just totally opinionated. This is an open chat. This is an open live stream. What I say isn't necessarily true, right? It's just we're just all talking here, throwing out opinions. Jason Johnson, good to see you. The Mighty Bull is here, says watching, listening, and learning. Good to see you, Mighty Bull, and happy Friday to you. Hopefully you're doing well. Check out this, everybody. So if you look all the way in the front of your screen here, you can see the Aston Martin building. That's going to be an unbelievable building when it's built. Incredible. Hey, Bob is here, says good evening, Tom. Good to see you, Bob. I see Joan is here. Good to see you, Joan. Dusty Cole says, but they'll be paying your rent/mortgage too. Cindy Foley. War Walker says, if things don't change in downtown Miami, I may have to move to the slums and share the place with the 2-inch roaches in the kitchen. This is War Walker. Yeah, I mean, it's definitely, I think there's an affordability crisis here in the United States for sure. But usually, right, so usually the markets that are really, really red hot during a bull market. So for example, in this cycle, you look at places like Phoenix, Arizona. You look at places like Las Vegas, Nevada. You look at places like Austin, Texas. Usually when you have the most exponential growth in prices, those are tend to be the markets that correct the most. So I think you're going to see prices come down. The photos from around New York says, how are the schools in Las Vegas? I actually have no idea, to be quite honest. I really, really don't know. You know, I think some of the best schools in the world in terms of public schools are actually on Long Island, New York. I believe. Hey, Ed Dunkel is here, says Austin is so expensive right now. Indeed it is. I think it's going to come down though a little bit. I think Austin specifically is going to come down in price. Dr. Longus is here, says, hey Tom, good to see you, Dr. Longus. Joan says, Miami stream looking strong tonight. Thank you, Joan. Hopefully you are enjoying it. Austin City Limits says, do your homework, do background checks when you rent property to others. Yeah, especially in this environment. You know, I think one of the reasons, and I think we were talking about this probably 4 months ago on the stream, I think one of the reasons why rents are so crazy, because if you actually look at inventories or vacancy rates in places like New York City, they're actually a little bit elevated, which is very strange, right? So why would we think, you know, if real estate is all dependent on the supply and demand, you know, why are there actually pretty high vacancies now in places like New York and other cities? Well, I think it's because of all this COVID, I don't really want to call it stimulus, but I guess forbearance or rental forgiveness, where in some places you didn't even have to pay your rent and landlords got stiffed. So a lot of the times right now, I was reading an article in the Wall Street Journal, you know, let's say if a landlord has 20 units and they're only renting 10 of them, they would rather wait until they see a really, really well qualified tenant that's making 80 times the rent in order to rent it to them, because they don't want to take a chance on getting burned again with the squatter. So I think this has created distrust between landlords and tenants specifically, which is not good at all, which is really, really not good. And the reason I say that is because if you're a landlord and you've gotten stiffed, well, there's no way you're ever going to take a chance on somebody ever again that maybe only makes, you know, 20 times the rent as opposed to 40 times the rent. Or maybe they have, you know, a 620 credit score. You know, those people will probably never be able to rent a place again. And that's why, you know, I think this goes along with the thesis of a two-tier society where you're going to have the extreme haves and the extreme have-nots. So I think there's multiple factors, but I think that specific factor played into it a little bit, where I don't think landlords will have any leniency on, you know, maybe your credit score is a little bit weak. I don't think they're going to make any exceptions. But again, could be wrong, but I think that's what's playing into it too. Captain Coomer says, Tom, all these other cities are all hyped up. I don't care what anybody says. New York is where the heavy hitters are and the money-making capital of the United States. Yeah, I agree, Captain Coomer. I made a small fortune in New York as well and continue to do so. I mean, look, my favorite two cities on earth where I want to live in my life is number one, New York City, number two, Miami. I think for me, these are the best cities for me personally. Again, people could have their own opinions. Some people hate New York, some people hate Miami, some people hate both. But I mean, for me, my personal, I would say, likability on sort of the activities I like to do, the weather, the people, the business environment, the technology environment. I think you need to be, or you need to have a presence in New York, and you need to have a presence in Miami if you want to make it in tech specifically. But I agree. Lena Sandoval is here. Says, hello, Tom. Good to see you. Welcome. Billy says, don't try to time anything in the housing market. Focus more on timing the ability to buy a house. Then when that road crosses with a drop in home prices, you'll be prepared. Yeah, I think, Billy, I think you're right. I mean, at the end of the day, in my opinion, because I've seen, you know, some of my friends make this mistake too, is they tend to buy homes because everybody else is buying a house. Oh, my friend from high school bought a house, that means I have to buy it. You know, my neighbor or my coworker just bought a house, that means I'm behind, I gotta buy a house. No, it doesn't, right? I mean, that's a surefire way to get foreclosed on. The most important thing, in my opinion, that you need to do is only focus on your own personal finances. Don't focus on anybody else's, right? You got to focus on number one being you. And if the numbers work for your budget, if the numbers work for your savings, if the numbers work for your income, then I would, you should do the deal. But don't feel pressured into needing to buy something just because, you need to keep up with the Joneses. I think that's really terrible. So I think it's a good piece of advice. Nicholas Durr says, hey Tom, have you been to Charlotte, North Carolina? So I haven't, but I've heard good things about Charlotte. I've heard really, really good things about Charlotte. Jerry says, my friend from high school got married, so that means I have to get married. Jerry, good to see you. Welcome. Adrian is here. This is so true. FredEx. Ryan Royal says, New York Magazine had an article about an apartment building, live-in super that asked for a raise and got evicted by the building owner. Oh my God. Yeah, so a lot of times the supers will live for free. I feel like we've been at this red light for quite some time. Let me press the button. But no, I mean, guys, I think this is a good conversation. I think we're having a good conversation. A lot of different opinions on things, which I like. I'm learning a lot. Brad's Brain says, be smart, yes, but I honestly bought my first home because I'd seen many buying homes. Key was I bought what I could afford. That's perfect. It's perfect. Yeah, Quants is like, my streamer got a house, I got to get a house. I mean, in many instances, it's actually more financially advantageous to rent, right? There's many, many benefits of renting, especially if you're very young and you want to be nimble in your career. Let's say if you start a career in New York City and then you want to move out to LA, start a career there, maybe go to Denver, go to Miami, just to sort of feel out where you want to be and travel a little bit. Renting definitely has its perks. So we are passing the JW Marriott here. A lot of party buses in Miami. Don Smith says, wish I could buy a beachfront property in the Philippines. I was looking online and you could actually get a really, really nice 2-bedroom apartment in Thailand. Like extremely, extremely affordable. Which is really tempting. Imagine just, calling it quits early, retiring in Thailand or something like that. Yeah, bagels and walks is like New York City scaffolding. Hey, Jesse Markowitz is here. It says, hey Tom, I had purchased my apartment in the Icon Brickell. Wow, that's a beautiful building. Congratulations, in 2021. But same, only bought what I was comfortable paying considering the HOA fees, which can be raised. Love the location. Wow, Jesse. First and foremost, congratulations on your purchase. That's a beautiful, beautiful building. That's a beautiful building, man. I was actually, I wasn't personally looking at places in that specific apartment or let's say condominium, but sometimes for fun I'll just sift through Zillow and look at it, and there's some amazing units there. So congratulations on your success. That's awesome, man. That's awesome. And I agree, fantastic location, beautiful views, by the way, too, amazing views, and you're right next to everything. You're near the Brickell City Center, Whole Foods is here, so you got everything you need, man. That's awesome. Jerry says, Tom, I got an Airbnb condo for $300 for 2 weeks. Holy crap. Yeah, Bob is like, the Icon is the one with the creepy statues. So isn't that the W Hotel? Maybe they're in the same building, the W Hotel and the Icon place. Photos from around New York says, Tom, are there any co-ops in Miami? I'm not sure, to be honest. So I'm really, really strange about that stuff. I think I've said this on the stream once before, but I really do not like, and again, this goes back to what we were talking about on the stream. You have to do what's right for you, right? So some people like living in a building with paying HOA fees and all that stuff because you get great amenities. I just don't personally like to do that. I'm not saying it's bad, but I'm just saying me personally, I don't want to do that stuff. So that's why, you know, there was a lot of properties I had to walk away from, because here in Southern Florida, you know, there's a lot of gated communities and you have to pay, you know, security fees, HOA fees, and I didn't really want to do that. And there were a lot of deals that were really good deals that I walked away from. And also in those gated communities, there's different renter laws, renter rules about short-term rentals and things like that, preventing you from, you know, maybe Airbnb-ing and things like that. But I think that's why for me, maybe, you know, duplex, triplex, single family is a little bit better. I think for me specifically. So here we are over the bridge, walking to Brickell from downtown Miami. And in the distance, you could actually see Brickell Key. Hey, Eyeglass Lady is here. Good to see you, Eyeglass Lady. Hopefully you are well. Drew Johnson says, yeah, I avoid HOAs. The only thing I will say is a lot of the buildings here in Miami that have HOA fees, I mean, the amenities are unbelievable. I mean, the gyms that they have, the pools. So it's really, really enticing. I mean, you know, you could pay $300 a month, have access to a free gym, have access to a pool whenever you want. So in instances, it is worth it. Definitely is worth it, to be honest. Dusty Cole says Thailand and Bali is supposed to be very affordable. Vietnam as well. Matthew P is here, says hello Tom, good to see you old chap. Thank you Matthew P. NG is here, good to see you NG, and happy Friday to you. So this is the Aston Martin building that's supposed to look unbelievable once it's finished. Eyeglass Lady says HOA fees in California are a farce. Funny. Hey, Austin City Limits is Santa Fe, New Mexico has expensive properties because of the Californians moving there. Yeah, I think also Nevada as well saw a big influx of people from California. You know, not for nothing, everybody. On Long Island, I've been seeing a lot of California license plates here in New York. A little weird, but it's true. Hey, Daraj is here. Says, whoa, Tom, good to see you in Miami. Hey, thank you so much. Yeah, we just got back 2 days ago. Yeah. Absolutely beautiful weather. The only downside, it's supposed to be raining. It's supposed to be crazy all day tomorrow and all day Sunday. So hopefully we will miss the storm, but supposedly it's going to hit us hard at like 4 o'clock in the morning. I did briefly want to touch on everybody. We did get retail sales numbers out today. But keep in mind, you know, as we talked about at the beginning of the stream, the retail sales numbers that we get, they're not adjusted for inflation. Okay, so what does that mean? Even though retail sales were up about 1%, if you think we just got the CPI print. If CPI is running at about 9.1% a year, you know, that means you almost have, you know, a little bit under 1% inflation month over month, which is crazy from the CPI numbers that we got at on Wednesday. So if you actually factor in those retail sales for inflation, we were actually negative. Okay, and the reason why I wanted to talk about that is because when Home Depot reported earnings last quarter, even though their same store sales and their average ticket items or their average tickets were up, which means if you walk into a Home Depot, what is the average ticket size for a person? You know, let's say if you walk into Home Depot, the average person walks out of there spending $70. Are they spending $70 because they're buying more additional products and services, or are they spending $70 there because they are forced to, because the goods and services that they already buy are now more expensive, right? And obviously it is the latter. The reason why people are spending more at these stores is not because they're actually getting more bang for their buck. It's because they walk in and the price of whatever they want to buy is more expensive. So even though the retail sales numbers came out today, technically we're positive, I'm a little bit concerned about it because factoring in inflation, it seems like the consumer is slowing down here a bit. Before we go, I did just want to touch on briefly that we are in the thick of Q2 earnings. And the number one thing, and you guys will start to see this, on headlines and CNBC over the next couple weeks, really, really pay attention to gross margins and profit margins at some of the largest tech companies and consumer discretionary companies. For one reason and one reason only, currency exchange rates. Okay, so we've been seeing unbelievable turmoil in the currency markets, specifically in relation to the US dollar. I mean, I think we have generational dollar strength. The US dollar is now on parity with the euro for the first time in 20 years. And the Japanese yen is absolutely fallen off a cliff. So we need to be cognizant of that as we go into earnings season. We heard from the CEO of ServiceNow, which is a big enterprise software company, Bill McDermott, CEO of ServiceNow, actually coming out and giving a profit warning to Jim Cramer on Mad Money about this exact thing that we've been talking about, okay? So if you're a big multinational company selling abroad overseas, when you go to exchange your currency back to US dollar, if the US dollar is so strong when it's matched to, let's say, the Japanese yen or whatever, emerging market currency you're selling your products in, that's going to, be a big impact to your bottom line. So be cognizant of that. I think this is the most critical earnings season ever, because if earnings miss, a lot of these analysts and investment banks are going to absolutely crush valuations in terms of, forward PEs. So they're going to adjust their models and they're going to say, okay, well, the S&P 500 right now is technically trading at 16 times forward earnings. But after we heard from Mark Benioff, after we heard from, XYZ CEO giving a lazy or lackadaisical outlook for their earnings, maybe the S&P 500 is actually trading at 19 times earnings because profitability is expected to drop. And if that's the case, we could make one leg lower here in the market, which would bring the S&P 500 around 2,900 or 3,100. Should earnings come in weak, and most importantly, above all, should CEOs of these companies actually guide lower for the entire fiscal year. So be cognizant of that. Hey, here now, thank you so much for the $10 donation. It says, hey Tom, will you do a beach walk sometime soon? The buildings are overrated. So we actually will. I'm actually planning a beach walk tomorrow, but it may be a standalone video that we will upload. I want to stream from South Beach sometime this week before I go back to New York. So we should have a stream from South Beach, but once again, here now, thank you so much for the support. I really appreciate it. Gene says, hello Tom, it looks nice and breezy in Miami. It is. It's very breezy. The wind was crazy today in Sunny Isles Beach, Florida. For a brief amount of time, I was in Sunny Isles Beach today. Absolutely crazy, the amount of wind. Very, very humid today, but above all, tomorrow, we're supposed to get a little bit of a storm here in southern Florida. So there may not be a stream tomorrow if it's really, really pouring, raining. We'll have to take a rain check, and maybe we'll just do a behind the desk stream or something like that. Dusty Cole is here. Gene says, hey Tom, welcome. Dusty Cole says, Santa Fe and New Mexico in general is great. Albuquerque, Netflix is blowing up there after Breaking Bad. Very nice. Dwayne says, greetings from Edmonton, Alberta. It's my birthday. Dwayne, good to see you. And happy birthday to you. And hopefully you have a fantastic birthday weekend, my friend. Don Smith says, Putin cuts off natural gas to the European Union on July 22nd. Inflation flies after that. Yeah, I think if we want to talk about Germany specifically, I think the Germans made the most grave mistake by being so dependent on Russia and all of these, you can essentially say, world scumbags. Essentially, we are financing all these people. We could easily be energy independent. All Western nations could easily be energy independent if we just drilled here. But again, I don't really want to cause a political discussion, but looks like we'll have to be dependent on Russian oil, which is not good. But Jetstar says, we were in South Beach for a few weeks. Got got to go after dark to see all the buildings light up. Nice. Very nice. So here we are approaching Brickell City Center, everybody. Sometimes I work in the WeWork office right in the KPMG building. But if you guys are enjoying the stream so far tonight, if you're enjoying the conversation and the beautiful sights of Miami, feel free to leave a like on the video and hit the subscribe button if you are new. Obviously, we go live between New York City and Miami about 5 days a week and have conversations about the broader economy and the markets. So if you want to be a part of that, feel free to subscribe to the channel. G-Shep says we have to learn to get away from oil. Ooh, that guy was flying, man.
Watch for vehicles.
Yikes, that guy was flying. I mean, if you're in a parking garage, there's no need to go like Grand Theft Auto down the ramp. But in general, I agree with you, right? We need to learn to sort of wane ourselves off of fossil fuels. I think everybody is in agreement of that, but we need to do it in a way where it's sustainable and we don't cause the risk of rolling blackouts and energy crises, and we don't make ourselves vulnerable to financing dictatorships across the world. Because if we just go cold turkey on oil and fossil fuels and fracking right now, what do you think the global dictators are going to do? You think Putin's like, yeah, I'm going to buy into all this ESG nonsense and kumbaya? No, these guys are freaking killers, dude. Come on, man. So we got to transition to renewable energies as we are waning ourselves off fossil fuels, but you can't do it in a non-sustainable way where we open ourselves up to essentially, you know, funding dictatorships around the world. And you know, China, you know, you think China is going to be on board with all this ESG kumbaya stuff? No shot. So I think I agree with you, but we need to do it. We need to build out the renewable infrastructure first before we just go cold turkey on the oil and gas, right? I think if you do it the other way, you know, you're going to have the mess that we have right now. Yeah, Jeff says probably enough gas here in Pennsylvania to supply the whole country. Also in New York too. So in upstate New York, you have what's called the Marcellus Shale. So if you just were fracking up there, you'd probably have enough gas and everything to be good. Drew Johnson says 100% agree, Tom. Yeah, and look, it's not, and I think it's healthy to disagree. Because at the end of the day, I think everybody on the stream wants to do the right thing, right? I don't think anybody's questioning each other to say, hey, you know, we want to pollute the environment, we don't want to do the right thing. No, we want to do the right thing. We want to invest in renewables. We want to do it the right way. But I think it's very dangerous because we have to understand not everybody's like the United States. Not everybody's like Canada. Not everybody wants to, you know, try to save the environment, do the right thing. You know, you have more coal power plants being built in China than any time in history, okay? So we can't leave ourselves vulnerable by just going cold turkey, shutting things off, and then having to conserve energy when it's all systems go in other places around the world, especially if they live in dictatorships. So here we are in Brickell, everybody. The RT440 says, I agree, we should be drilling like crazy and funding the transition to renewables with the profits. Dukes is self-service Shell gasoline, $159, $169. Troy says, Tom, just curious, do you follow the radio show / podcast Marketplace APM with Kai Rizdal? You are just so savvy on explaining the economy in your view. Troy, let me take a screenshot of that. So I don't, Troy, but I always love recommendations from people, because I'm a podcast junkie. I love consuming information. So thank you so much for that recommendation. The APM, Marketplace APM. Let me screenshot that. But Troy, thank you for watching and thank you for the recommendation. I'm going to check that out tonight. Western Mass Dave says, Tom, agreed, and remember we get a small portion of oil from Russia, unlike Europe, where dependency is much higher, says Western Mass Dave. Dean says, Tom, Generation 3 nuclear reactors are good, clean energy solution towards renewable diversity. I agree. Yeah, I mean, nuclear power is the most cleanest form of energy on the planet. And I understand that there was concerns about, obviously the nuclear waste and the meltdowns, but as that technology gets better, there's almost virtually zero risk of, sort of like a reactor melting down and things like that. So you're right. Fred Wang says, Biden is selling stockpiled oil to China. I guess there isn't any environmental concern there, says Fred Wang. Jovic says, Germany had 17 nuclear power plants, now only has 3. Yeah, they're shutting down nuclear power plants across the world, which is insane to me. Let's see who I missed here. I apologize. Don Smith says, Saudi Arabia says no extra oil. I did see that. As well. Joe Biden was there with our friends. Mark Sage says, hey Tom, glad to see you back in Miami tonight. Thank you so much, Mark, for watching and being here. I appreciate it. Being in Miami is a nice break from being in New York. It's a nice break, I'll just say that. Jack says, what is ESG? So ESG is environmental and social governance. And I think one of the, I won't get too political, but I will drop this little piece of information. And again, this is just my opinion. Anytime I say opinionated things, I always like to disclose that because, opinions are up for debate, right? So again, what I'm about to say is up for debate, but this is just my view. They're now assigning ESG scores to specific countries. Okay, and this is why we need to be really, really careful about that. And I'll explain why. Sri Lanka has the best ESG score in the entire world, which I think is at about 98. People are starving there. They don't have any fuel, and they're rioting in the streets, and they had an insurrection. And I think the Western nations are at fault, including the United States. And I think that the United States and other Western nations should actually be held liable for what happened in Sri Lanka. Because essentially, the West tends to hold other emerging markets hostage in relation to investment or foreign aid. They say, look, if you want our US dollars, you need to do this, 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 and this. So they say to other governments, hey, if you want foreign investment, if you want US dollars, if you want us to invest in your country, you need to have a great ESG score and all this stuff, and you'll get our money. Yeah, but what happens when they do that is they don't have the infrastructure and the money and the wherewithal to build out all this green energy stuff and green energy infrastructure and power in these other countries. So what happens is the whole economy just crumbles and collapses to nothing. So I think it's sort of like the idea is great, but the execution is so egregious, right? So I think everybody has a good idea that, look, this isn't sustainable, just burning fossil fuels, right? Everybody understands global warming. Everybody understands that we don't want to pollute the environment. I think everybody agrees with that. But I think where we differ is the sustainability of the transition. So I think we need to be really, really careful about, pushing countries to adopt very stringent ESG standards when they barely have the ability to run their country off of the outdated infrastructure they have. Dusty Cole, I agree, says Sri Lanka's unique situation. Yeah, that's why I say, again, it's up for debate, but this is just like an opinionated thing. It's not like set in stone. I know it's a very fluid situation, but guys, on that one, oh wow, John says my parents owned a hotel on South Beach. Wow, which hotel? I think this is a new hotel here. But let us know what hotel. Yeah, Ryan Royals says, I read that Sri Lanka banned pesticides and crops and lost their crops, horrible situation. Yeah, and again, that all ties into the ESG stuff, right? Because some specific pesticides they say is bad for the environment and this and that, which I get. But look, and I think that's what's going on in the Netherlands now too, where you have people essentially protesting and boycotting this. But again, maybe we'll continue that conversation in depth on a later date in another stream, because we do have to head back, because I do have to get my bus. I think we're running a little bit over time here. We're already up at the 1.5 hour mark. You know, it's strange, when we start these streams, even though we stream for, 2 hours, it feels like we just started the stream 30 minutes ago. So I lost a little bit of track of time here. Hey, Drew Johnson, thank you so much for the $5 donation. You are very, very kind. This is great talk. Hope everybody has a great and safe weekend. Yeah, hope everybody watching has a good weekend. Hopefully you'll have better weather than we're having here in Miami this weekend. We're supposed to get a big storm. So please be safe, everybody. War Walker says stay 2 hours more, maybe. So War Walker, you're a fellow Miamian. What's the situation? What's going on with the weather tomorrow? Is it going to be a washout or what? Supposedly, it's going to be a big thunderstorm tomorrow, but hopefully not, because I wanted to go to Wynwood tomorrow. I wanted to spend some time in Wynwood. TPOC 5000, thank you for joining. I appreciate it. Dusty Cole says, agree, time flies here. But Drew Johnson, thank you once again for the donation. I appreciate it. I'm very appreciative of the support, everybody. You don't have to donate, but if you do, I do appreciate it, and I send my thanks. So this is the Lucid Motors company right across the way here, Brickell. Hey, Charles Collins says petroleum and coal will rule the energy world until the end. Global warming is a fraudulent idea created by the Soviets in the 70s to destroy the West, says Charles Collins. Hopefully you're having a good start to the weekend, Charles. BOT says Sri Lankan PM sold himself to China and China debt trapped them. I think China's doing that with a lot of African nations as well. I think that's going to be a good topic for maybe another stream. Hey, John is here. John Doherty, thank you so much for the $6 donation. Much appreciated, and hopefully you're having a good Saturday so far. Nav Shah says, how tall are you? You're like head and shoulders above everybody. How tall am I? I think I'm right about 6 foot. I think I'm right about 6 feet tall. Lemonade says, I can't believe I did not get the notification the whole hour passed by. So Lemonade, I think what YouTube is doing now, for everybody that's curious, if you go to the subscription feed on the Walks in Wall Street channel, I think you need to ring the bell icon for all notifications. Or if not, it'll only notify you sometimes. I think they added like an additional step. So if you want to be notified when we go live, you need to click the bell icon for all notifications. It's a little weird. I don't know why they did that. Hey, my favorite person of all time, Disney cast member. What's up? Disney, good to see you. We were just talking about crazy weather. Disney cast member was sending me some crazy stuff about Arizona with the dust storms and all that stuff. Tomorrow, Disney, to your point, it's supposed to be really, really bad here in Miami, but I think it's supposed to start at like 4 a.m. and we're gonna have big thunder and lightning storms, rain all the way through the night. Hopefully the weekend's not a washout. I want to try to get some footage in Wynwood, but we'll see. Disney cast member, fellow Long Islander as well. So thank you for joining the chat tonight, Disney. Hopefully things are going good in your neck of the woods back in New York. John says, looks like 2nd Street and 1st Avenue. Rusty Golfer says, I notified at the end of the stream usually. Photos around New York says, Tom, topic for another stream, student loans supposed to restart on 9/1. Yeah, I heard about that too. You know, I have a feeling that they may kick the can down the road a little bit. Ooh, it looks like the drawbridge is up. So if you guys can see in the distance there, as you crossed South 7th Street, it looks like the drawbridge is up, so we may have to wait a little bit before we walk back over. So as we wait for the light, maybe I will, you know, I wanted to give everybody an observation that I've noticed. Okay, and let me know what you guys think as well. So I think everybody who's been watching the streams sort of knows me generally, how I get my news and information. So here's my news sources, just so we can remove all of the cognitive biases that'll potentially arise when I say this observation. Okay, number one, I tend to try to get my news sources that are based in some sort of financial data. And the reason why I do that is because it's very, very, well, it's not impossible, but it's harder to put out fake news when there's financial data behind it, because usually there's auditing and all types of other things like that. So based upon that, I tend to get my news from like Barron's, Wall Street Journal, Investors Business Daily, because as they're covering specific companies, as they're covering economic data, you know, you sort of get a picture into what's going on in the world through that pane of glass, if that makes sense. Right? I think you can develop a real strong cognitive bias if you turn on, let's say, Fox News, and you only watch Fox News, or you turn on CNN, right, and you only watch CNN. So now that I got that out of the way, here's what I've noticed. So I was staying at a hotel for about a week, and every morning the hotel offered free breakfast. Okay, so I would go into the hotel, get the free breakfast, sit down, and I noticed something. On one side of the room, you had Fox News, okay? On the other side of the room, on the opposite side of the room, you had CNN. And keep this in mind, I went to this breakfast probably, I think, for about 9 days in a row. And here's what I've noticed. And this is no exaggeration, by the way. And keep in mind, this is coming from a person who never watches Fox News and never watches CNN. I actually refuse oftentimes. The only thing, and literally the only thing when I picked my head up to look at CNN that they were talking about is January 6th. Every day, January 6th. If I turned my head to the other side, and if I looked at Fox News, could anybody guess what they were talking about? Let's do this. Could anybody just guess what you think Fox News was talking about? I'll wait for a second, see if anybody can guess it. It was bizarre. It was almost like, and it made me realize, I'm like, this is actual brainwashing. Yeah, exploration, Biden, the Hunter Biden laptop. Like, so the whole time, like in big bright letters across the screen, Hunter Biden laptop this laptop that, right? That's it for 9 days straight. And it got me thinking, oh, check this out, the drawbridge is actually going down. That's cool that we're actually gonna be able to see this. And it got me thinking, it doesn't matter what side of the aisle you're on, right? It doesn't matter if you're Democrat or Republican, you guys know I don't care. But the thing is, if you really sit and consume Fox News and CNN, from the data points that I collected, which was about 9 days, literally, and this isn't exaggerating at all, the entire time you're getting indoctrinated by Hunter Biden propaganda, laptop propaganda, and January 6th propaganda. That's it. There's no value there. There's no material value. So here's the conclusivity, or here's my conclusion about that. Corporate media, in my opinion, their goal is not to give you the news. Their goal is to get a rise out of the viewer and have people be at each other's throats. That's my conclusion. Because it's so blatant, the bias. Right? It's so blatant, the bias. Because you guys know, and I tend to lean more conservative in, my financial being and, the way I live my life. But it's come to a point where the two main media organizations, CNN and Fox News, it's just become so one-sided that it's almost just not even reliable. And if you're going to spend the entire week, so I'm assuming just CNN is still, as we're speaking, is talking about January 6th, and as we're speaking, Fox News is still talking about this laptop. So to me, it's almost disingenuous to Americans in general, because if you take a step back and look from the outside in, you realize you're being totally propagandized either from the right or from the left. It's sort of like a look here, don't look here. And I think that's just really sad. So at the conclusion, I was just like, you know what, I think Americans in America would be in a better place if we said, look, you're a Democrat, I'm a Republican. I think we need to realize that the stories we're being fed, although they may be true, I think they're being exploited to get a rise out of either party. And so that was my observation. Hey, Marty Lewis is here. Good to see you. Dan Russell says people get real news from memes. Yeah, I just don't think it's nice to try to get a rise out of somebody. It seems like corporate media is just trying to stir the pot and get people upset. It's like, that can have serious ramifications, right? And especially now that we are in a country coming up against severe mental health problems, we have mass shooting crises here in the United States. Why do you want to stir the pot even more? Why do you want to upset people, right? That's just, to put it in the most simple terms I can, it's just not nice, man. It's almost like sadistic. Lemonade says it really is brainwashing. And when you tell your family it's ridiculous, you're the one being indoctrinated. And look, and I'll clarify my statement a little bit. I understand what happened on January 6th. I understand what's on Hunter Biden's laptop is terrible. But the sheer pounding and hammering on it, it's like Americans don't care about that right now. Okay, Americans care about being able to put fuel in their gas tank, right? Being able to feed their families, being able to move into an apartment that's not $3,000 a month, right? Those are the real things that we care about, not all this other nonsense. Hey, Penelope's here. What's up? Penelope says, hey, Tom and everybody. You were so correct. Alternatives are better. Mainstream media is so corrupt. Yeah, I think that's why I try to, and again, once again, I could be wrong about this, but that's why I try to get my news from financial sources. So if I want to learn about, whatever XYZ, I think if you look at it from like a financial standpoint, it's kind of hard to have a bias because numbers are numbers. I don't know. Well, it looks like, I guess you guys will have to hang out with me here as we wait for the drawbridge to go down. Jolie87 says, you are right. Quinn FTBL is here. Good to see you. Yeah, Brad's Brain says news ratings are tanking. It's a falling endeavor. Yeah, so maybe they're just trying to stir the pot a little bit to boost the ratings. And I get that. Like, I understand copywriting, right? It's sort of like, what's people going to watch? There's been studies on that. Like, what would you rather, like, what gets the most views and what do people watch? And it's really drama is what people watch is. is what people watch, and people like to watch things where people are fighting and getting angry at each other. It's unfortunate, but it's true. So maybe, Brad, to your point, they're trying to do something from that style. Christina Wilson says Vice is so bad. Vice is completely American propaganda. Zach says capitalism will always win. Rent should be $5K. This is Zach. Brian says legacy media is going out of touch with reality. Zach says, hey Tom, in Los Angeles, they have homeless outside of $3,000 apartments. Yeah, you have that too in New York as well, unfortunately, and in Miami too. Dan Russell, the one and only, says they lied to the American people for so long that we need to seek alternative sources. Yeah, I mean, I think my life has materially improved as I have totally ignored Fox News and CNN. Beautiful view here as we walk over the bridge, though. Yeah, Brian is like, news nowadays is basically a reality show. Yeah, and I think a lot of things are like fabricated a little bit. I think here's the last example that I'll give. Right, here's the last example that I'll give, and then we actually got to wrap up the stream, guys. We're going on 2 hours. Oh my God. But look, I thought we had a fun stream. We talked about a lot. I think usually the last 15 minutes of the streams are just a free-for-all, which is actually kind of fun. So here's the last thing I'll say. I think both sides try to like extend and just like hammer on one point. Okay, so I'll give you two examples. One example that I noticed when I was at this hotel is Fox News was running a clip about about President Joe Biden giving somebody a handshake and saying, oh, he's, shaking hands with the air, he has dementia, whatever. So I looked at the clip, and this is coming from somebody that tends to lean more conservative. You guys know that. I'm not a Joe Biden supporter by any means at all. I would never vote for the guy. I think he's so ill fit for the job, it's almost embarrassing. But I looked at the clip, and I'm like, dude, this is fake news. I'm like, there's one thing to not agree with Joe Biden's policies, and yes, I understand that he fumbles his words and he may have dementia. We understand that. But this particular clip, he was just simply pointing to where he wanted to sit, right? And so that's what I mean about like the media drags it on and on. It's like, okay, look, we get it, but not every single thing the guy does, it means he's, an old man and he's getting dementia. Like the clip was literally, he was pointing to a seat where he wanted to sit. So I had to walk out. I'm like, it's total propaganda. And I was watching a clip on CNN, and they obviously just hammer on Trump. Like, it's like CNN is obsessed with Donald Trump. I'm like, guys, he's no longer the president. Just forget about him. The American people don't want to hear about Donald Trump anymore. Okay? Like, just forget about the guy. He's no longer president. We have a new president. Let's move forward. So anyway, I'll digress on that front. But they do it on both sides. Fox News is bad at it. Look, if you want to criticize him for doing something stupid, then yeah, if he actually does it, then it's ridiculous. But now it's a little bit overarching. And I think the Democrats would be polling a lot better if CNN and the left-leaning news sites just stopped talking about Donald Trump. I think people are sick of hearing about this guy. But that's just my opinion. But everybody, I had a good time tonight. I want you guys to do one thing. I want you to have a fantastic weekend. I want you to rest up. I want you to hang out with your friends and family. I want you to forget about all the crazy politics. And I want you to try to do something fun. Maybe take a walk in Central Park if you're in New York. Go hiking wherever you are. Go to the beach. Have a good time. Kick back, relax, read a good book. And we will regroup again on Sunday. Because tomorrow, I think it's going to be a big storm here in southern Florida. So we'll conclude the stream with that. I appreciate everybody joining. If you enjoyed the stream tonight, obviously hammer the like button. Subscribe to the channel if you are new. We go live about 5 days a week between New York City and Miami. So Joan, I appreciate it. Austin City Limits, my friend and good moderator, photos from around New York. Thank you for joining tonight. Penelope, thank you so much. Ryan Royal, thank you. Dan Russell. Western Mass Dave, I appreciate you. Don Smith, thanks so much. Disney cast member, thank you so much for joining tonight. Hopefully you're doing well. Hopefully you're feeling well. Ruby Falcone, Sabrina, Jean, Dusty, Jolie87, East Coast, Snoopy, Robert, thank you. And to the Mighty Bull, have a good night wherever you are, because there is always a bull market somewhere and you just need to know where to look. Have a great restful weekend. We'll see you guys right back here either Sunday night or Monday night to kick off the second week of Q2 earnings. Have a good night.